welcome in our final guest of the show, Steve Westley, founder and managing partner of the Westley Group. Steve, thanks so much for joining the show. So we've hit the key numbers here. One other headline that I think is important to point out is there was that Reuters report that Tesla's going to be delaying the production of the lower cost EVs by months, potentially until next year. And one of the headlines that I'm actually seeing come out from Reuters is that plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. So I would think that that's largely seen as a positive development here.
Well, I think so. Look, there's a huge focus now on getting lower cost vehicles into market. Everybody's seeing how well BYD's doing. But look, this is a big miss on deliveries, 337,000 versus 380,000 estimate. Flat Q1, actually down 19.34 billion, less than anybody expected. But what really stands out here is Tesla's revenues are down 13%, but rest of the world, EV gains are up 29%. That's hard for the alleged market leader to explain. Share price, again, dropped 50% from December. That's a loss of $800 billion. Punchline, it's a rough quarter for Tesla, and they may not have hit rock bottom yet. The question is, what are they going to do to fix it?
Okay, so you're looking at this as you're focused on the negative here, because the initial stock reaction is positive, even though it's a clear miss, to your point, on both top and bottom line. But deliveries were also a clear miss. We already knew that. Could have essentially been priced into the stock at these levels. I think it's always this matter of, do you focus on the fundamental business, which is the automotive, or do you focus on the FSD and the AI robotics business, which has really been what gives Tesla this hefty valuation here? And it sounds like you're focused on the core business here.
I am. And look, let's deconstruct this a bit. Here are the problems. I mean, Tesla's had the quadruple whammy this quarter. No new product. No date for the $25,000 Tesla a lot of people are looking for. And delayed launch of the new cheaper Model Y. They've got a polarizing brand. U.S. sales down 13%. Sales in Europe down 43%. That's a lot. Huge and growing competition from BYD and the other Chinese. We're coming out there with lower cost vehicles. And FSD is late. Paused rollout in China, no approval yet in Austin. Those are four pretty big problems to solve. I think if I were to give advice, is they need a lower cost Tesla out ASAP to compete with the Chinese. They need to get robo-taxi launched somewhere, whether it's in Austin, China, Amsterdam, Europe. They've got to show that this isn't just a car company and a car company with flat sales. It is a technology company that can successfully bring new products to market. That's what's missing.
Okay, so it seems like you're going to get that lower cost EV based on the headlines that are coming out in the first half of this year. So that could be one of those questions or answers to the questions that you're asking. What about in terms of the ability for Elon Musk to recover from this kind of DOGE damage and the politicization? I can't even say it. Just the fact that it's gotten very political.
So look, there's no doubt about that. And most CEOs are assiduously non-political for just this reason. These are polarized times, and no need to upset half the country. I think if sales continue to decline, the board's going to have some tough decisions to make. Do you want Elon to come back, focus 100% on the company, get that new product out? Is it time for him to find his wind shot well? He's been tremendously successful at SpaceX. We'll see. I think the big thing for investors to watch is, what are the large pension funds going to do? Because if any of the major pension funds, like CalSTRS, where I served on the board, New York Commons, any of the major ones, decide it's time to sell Tesla for whatever reasons, polarizing, lack of focus, or just slow growth, that would be bumpy times ahead. By the way, CalSTRS holds around 5 million shares of Tesla. Keep an eye on the major pension funds.
Okay. Would you be an owner of Tesla here at, 51% off the highs, but 71% off the lows? Doesn't sound like it.
They need to find a new growth engine. If they can get a Model 2 in the market at $25,000 to compete with BYD internationally, I think they'll be off and running. If they can start to close the gap with Waymo, that'll be a difference maker. Those are going to be two tough hills to climb.
Okay. We are seeing Tesla shares lower right now, so that seems like there could be some volatility, ahead of that conference call. How much of it hinges, do you think, in terms of stock reaction on Elon Musk saying that his time at DOGE is coming to an end?
Well, I think that's clearly part of it, but I think everybody knows you want to have a CEO who's fully focused in charge. But I think the big issue, it still comes down to the fundamentals. Tesla has owned the EV market for the last 7 or 8 years. But the big issue here is BYD and the Chinese are coming on like a freight truck. BYD is booming, delivered 416,000 EVs in Q1. That's 38% year over year growth. They're building new facilities, Indonesia, Thailand, Turkey, Hungary. They've got 21 models. Apropos of what we're just talking about, Tesla has 6, and they've only launched 1 in the last 5 years. And I think if there's anything that symbolizes what's going on here, Tesla charges $8,000 to have your full self-driving in China. BYD just released an impressive version of the Seagull where you get free self-driving and you get the whole car for $8,000. So legacy Western automakers need to answer a question, find the answer to a sleek $15,000 Chinese EV. That's going to be what investors should look at.
Okay. All right. Well, we have to leave it there. We'll certainly be paying close attention to what Elon Musk has to say about the fundamentals, and also I'm sure he'll be touting the future in terms of what's in store for Tesla as well. Steve Westley, founder and managing partner of the Westley Group, thank you so much for sharing your thoughts.